The concept of variance analysis starts from the word itself, variance. Once we understand the meaning of the word variance, it will help us to now apply the term analysis to it. Do you understand?
Yes.
So variance in itself means something varies, right? Variance means there is difference, there is a deviation from standard A to standard B. Two colors can be put beside each other and you will see difference. That difference can sometimes be expressed by saying they vary from each other. And so that leaves us to may say that variance is not just
Hello. Hello. Hello.
can you hear me?
Yes, I can hear you.
How about now? Can you hear me?
Yes, I can hear you. I'm hearing you.
All right. So
Hello. Hello.
you can't hear me before?
Yes,
Okay, how about now?
I'm hearing you.
Okay, so I said say two colors, for example. How about now? Can you still hear me?
Yes, I can hear you.
All right, great. So say two colors, for example, and you put them together, the same color, maybe one is lighter than the other.
Okay.
You put them beside each other. Any difference that you can spot beside the two of them, you say they vary from each other, right? So we in every aspect of life, variances can be measured. Variances can be analyzed. It starts from identifying it down to analyzing it and then measuring it. Do you understand what I'm saying? Measuring and analyzing it. Now, this brings us back to our core job, costing and management accounting, right? Now, standard cost in itself is the process of saying, oh, this is the expected cost of this particular product, or this is the expected cost of this particular services based on your estimation of, say, material, labor, and overhead. So you look at how much is material needed to produce this product. How much is material needed to produce this, to render these services? And how much is labor that will be brought into play? How much is the overhead cost? By the time you look at those things, you now estimate, are you getting me? That,
Yes.
oh, the cost of doing this job is XYZ. Now, that cost is an estimation that you are doing before you do the job. That is standard cost. You have a contract and you say to take this contract for this particular time, you just do your plus and minus. Okay, you buy data, or you have a gig to train somebody. You buy data, you have to study more, you have to, and then you're also sharing your intellectual property, intellectual assets. Okay, so this is the amount it will cost. And then you charge your client based on that. That fee that you estimate, that your estimation is what we call standard cost.
Standard cost. All right.
Now, then you have actual cost. Actual cost is where after you have rendered the job, you now see the amount that you actually spent, the amount that the job actually took from you to do the job. That is the actual cost. As a woman, you go to the grocery store or you go to the market to buy things. You cook soup, you cook food, right? Like the one before you go to the market, you have an estimate, whether you write them down, whether you wrote them down or not.
Yeah.
You had an estimate in your mind. That is what informed the amount that was in your account before you went to the market. That was what informed that you were even capable of going to the market in the first place. That is how you know you are not broke. You had an estimate of how much you are going to spend in the market. That was the pre. Before going to the market, that estimate is standard cost. Now, by the time you gone to the market, you bought everything you bought and you came back home. Then we now have the actual cost. So
Yeah.
variance analysis shows the difference between standard and actual. There are two major types: price variance, which is the difference of cost per unit. Then we have quantity and usage variance, which is due to the quantity consumed. Oh, you prepared, like, let's say food, for example. You took
Mhm.
a bowl of rice. I know people like you might not be eating a plate of rice, you might be eating a bowl of rice. So you took a bowl of rice and you started to eat it. For whatever reason, you couldn't finish it. When you were dishing out the food, you dished out with the intention of finishing it, right?
Mhm.
That
Mhm.
is the standard usage. The
Yeah.
actual usage is when you finish eating the food, you couldn't continue. You couldn't finish it. The one you could eat is the actual usage.
Yeah.
Now, variance analysis now tend to look into, at management accounting level, now tend to look into why was there a variance. So at cost accounting level, at costing level, cost accountant will just say, this is the standard, this is the actual, right? And then you they tell you this is the variance. But at management accounting level, you're not just stopping at variance, you are looking into why. You're looking into why was there a variance. And you're also looking at what can be done to make it better, especially if the type of variance that existed is not a favorable variance. Are you getting what I'm saying?
Yeah.
So now, those are the two major types of variance. There are other types of variance, so like labor rate variance versus labor efficiency. Like the
Okay.
amount that, eh?
I see. Okay, please, before we move to other type of variant, this price variant, you said it is due to cost per unit, right?
Yes.
Then, like, it's based on, like, is it based on the actual selling price of what we estimated and what we actually sold the goods?
All right. So before you sell a goods, right,
Yeah.
you would have captured in all the cost of producing that goods. Then you now put a percentage as part of profits.
Yeah.
Is that correct?
Mm-hmm.
Now, that cost that you marked as the amount you spent on building that material, how did you arrive at it?
The what?
The cost you are marked, you wrote down as the cost of the material.
Mm-hmm.
You arrived at it somehow.
Yeah.
Now, by the time those costs, now let's say it takes
Okay, you know, I
you in
mean,
my
how did they arrive at that cost? The raw
yes.
material, the goods, work in progress, all of
But
it.
what I'm saying is that let's say you have estimated that to produce a bag of pure water, how much is a bag of pure sachet water in Nigeria now is 400 naira on the average.
How much?
400 naira on the average. Let's say 500 naira.
500.
So many places.
Okay.
Now it was 400 naira, and all of a sudden it jacked up to 500 naira.
Mm-hmm.
Now let me give you some. Let me expand that as an example a bit more. The cost to produce one bag that you are selling at 400 naira, the cost
Mm-hmm.
is 300 naira. You were selling at 400 naira, you were making profits.
Yeah.
Now, if the cost now shifts from 300 naira to 350, and you still want to sell at 400 naira, would you not be making profits?
Please, can you
I say it costed you 300 naira. You spent 300 naira to
mm-hmm.
produce that bag of sachet water that you are
Yeah.
selling at 400 naira.
Mm-hmm.
Now, if the price, that 300 naira now changed to 350, and you don't want to shift your selling price to for which number one has reduced your profits if you keep selling at 400 naira. I get what I'm saying. So if you
Okay.
now
Yeah.
decide to keep selling at 350, what has
Mm-hmm.
happened? You have intentionally allowed your profit to be reduced.
Reduced. Yeah. Yeah.
Now, for but many entrepreneurs, they shift the burden of that cost increase to the
But,
final user.
mm-hmm.
So they will not allow them their own profit to shrink. What they do is they pass that 15 naira increase in cost on onto the final user.
Okay.
Now, the selling price of that item has moved from 400 to how much now?
Three five
To
hundred.
450.
Sorry. Okay. 450. Yeah.
To 450. If they still want to retain the percentage of profit they were making, it will
Oh.
now be 450. I will get what I'm saying. So
Mm-hmm.
the 450 now, that is the new price of the market. If you're now analyzing your variance, because at the beginning of the period, you might have planned to sell 1,000 bags at 400 naira.
Mm-hmm.
But at the end of the month, you've sold just 900 bags at 450.
Yeah.
You can now explain to anyone that is listening to you that the reason why your price increased is because there was increase in the cost. That is where the management accountant will now come in. That the cost price increased. This particular material that is used in the production, the price increased, which has further
Mm-hmm.
impacted the overall price of the item. And when the price is up, what happens to demand? Demand goes down. And
Yeah.
then you can easily tell your employers that because the price went up and demand came down, that is why you couldn't sell 450, 1,000 bags. You now sold 900 bags. Do
Yeah.
you understand what I'm saying?
Yes, I can.
So there are those are the price variances where the
Basically,
amount, yes,
basically, the price variance and cost variance somehow somewhat related to each other.
yes, somehow related
Yeah.
because price variance now has to do with the selling price,
Yeah.
which is taking its root from what? From the cost
Cost.
price. Now,
Reducing the
there
cost.
are other things that can increase selling price. Though. Let's say there is increased tax.
Yeah.
Do you get what I'm saying now? So,
Yes.
but it is the duty of the management accountant to point it out to the management that, hey guys, the reason why this cost increased is because there is what additional tax that we are paying now.
Mm.
That is price variance. The same thing happens if you are not the manufacturer, if you are not the seller. If you are the buyer, you can easily calculate the amount you are buying it and the amount you are supposed to have bought it. Are you get what I'm saying?
Yeah.
So those are the various ways we look at price variance. Now we have okay, I've explained quantity and usage variance. Now we have other forms of variance. We have the labor rate and the labor efficiency variance. Our labor rate variance, that is the amount you've targeted to pay your staff, the amount you've targeted to pay your laborers at the beginning of the period, and at the end of the period, the amount you actually paid as your labor charges. The labor efficiency, you have calculated that 10 people can do this work in 3 days. But at the end of the day, 10 people could not do it in 3 days. They did it in 4 days. What has happened to you? Number one, they've delayed the completion time. That is efficiency variance.
Mhm.
You get what I'm saying? We have overhead spending, overhead efficiency, production variance. The company's target is that you produce 6 million tons, 6,000 tons of a particular raw material. But you are producing 5,500 tons. What happens to you? There is a what? Production variance. Or let's say instead of 60,000, you are producing 6,500 or 7,000. You have variance. Now you are not the one that will determine if the variance is favorable or adverse. From a not all favorable variance is positive. I don't.
Mm.
Do you understand what I'm saying?
Not of
As long
favorite.
as whatever, yes, as long as whatever makes the variance retain money with you, it is favorable. Maybe
Okay.
there's somebody you are supposed to have paid, and the person say, forget about the debt. The payable that you are converted into income. It's a favorable variance because the money did not move out of you.
Okay.
Are you with me?
Yes, I am.
Then procurement variance and other forms of variance that we have in place as a management accountant that can be brought to you to calculate. Why do we have price variances? Why?
Okay, is it like, are you asking me the question?
Yes, I'm asking you, what are the causes of material price variances?
Why do we have price variances? Yeah, like we said earlier, tax.
Yes.
Tax could be a cause why there'll be a major differences in price. Also, cost or in producing the goods. Also, the high cost of production. It will definitely affect price in selling those goods. Yeah, I just think because the major factor,
I'm with you. The major factor is what?
the major factor should be the cost in producing those goods and some other tax too, sales tax and various kind of taxes that could also affect those goods. Could be a difference, right? Could be a reason why we'll be having differences in price variance.
Okay.
Mm.
Okay. What of usage?
Usage of what?
Usage
Okay,
variance.
usage variance.
Yes.
Usage variance. Is it under price or like another type of variance?
Another type of variance.
Okay, usage variance in usage variance. Well, in the sense that, oh, okay, fine. Let's say usage in what sense? Like, okay, for example, the I don't the I don't really understand like in the context of the usage variance, but the way me I understand, for example, if consumers are requesting more for this and what this has been targeted. Yeah, don't let me explain for that. I don't really understand the what usage variance.
Okay. All right. Thank you for that. So, price variance will be caused by many things, which you have
Mhm.
mentioned one or two, right? Now, another thing that can cause price changes is supplier. Supplier can change price.
Do you mean
I
price
get you.
usage variance or ordinary usage variance?
Quantity, ordinary usage. When we talk of usage, we are looking at consumption. We are looking at quantity. Do you understand? What you use. When I spoke about your usage variance earlier on, I said you that you might not be eating a plate of rice. You might be eating a bowl of rice. Do you remember the illustration?
Yeah.
So in your plan, you might have estimated that you can, because of the way the hunger is really, really smiting you, you want to eat a bowl of rice or maybe two bowls. But then you can't take more than a few spoons and you're tired. Are you getting what I'm saying? There are
Yeah.
times you walk under the sun and you are so thirsty, you are so dehydrated, you are so thirsty and you're so tired. And you are feeling like if you could grab bottled water now, you would finish too. Are you getting me? But the moment you actually got the water, to even finish one will be tough. So anything that has to do with what you use, that is the word usage. Now,
Okay.
there are reasons why price varies, like you've said earlier, and what I've said, suppliers can change price. Currency can fluctuate. Exchange rates can affect price, especially for industries where their raw materials are imported, or industries where their products are exported. Currency fluctuations. Then bulk purchases. Bulk purchases. Are you get what I'm saying? Where you have to instead of buying one, you are buying a dozen, you are buying 10 cartons. That's bulk purchases, and you do not get discount. When you buy in bulk with the intention of getting discount, but you do not get discount, so the price would, where there will be variance. And we have emergency or spot purchases, impromptu purchases. Those are areas where there can be vigilance, there can be variance. Now, for the usage variances where we talked about the other time, we said um, we used the example of food. We used the example of Yes, food, the things you use, and all of that. What can another thing that can cause it is wastage. Maybe that food that you are planning to eat, you started wasting it down to the dogs. There will be a variance. Are you getting me? You are now the one that will say, "Oh, the variance here occurred because of X, Y, Z."
Variance in usage, right?
Yes.
So the usage is
Then
quantity.
what do you say?
The usage is quantity.
Yes.
Okay.
Usually generally speak to the things we use. Utilities, for example. Utilities is measured in kilowatts, not in. Uh, so with that, we have your usage variance, which, like I said, could be caused by a lot of things like machine breakdowns. Machine breakdowns. Are you getting me?
Yeah.
Poor quality raw materials. So machine breakdowns, poor quality raw materials, incorrect bill of material could cause usage variances. What
Incorrect.
is incorrect bill of material? Do you know what a bill of material is?
No. Like
Do you know
over.
what it is?
No.
Okay. Now, bill of material is like a recipe.
Bill as in BILL.
Yes, bill of material. It's
Okay.
like a recipe where it is often common to civil engineers when they give you an architectural drawing, a
Mhm.
3D architectural drawing, they give you a bill. And that bill considers that to produce this building, we need
Yeah.
1,500 number of bricks.
Oh, yeah.
Inside the 1,500 number of bricks here, we have social number in this size, social number in this size. Are you getting me? We need total number of bags of cement, 10 bags of cement. We need a trailer of sand. We need a bucket of cement. We need a bucket of granite and all those things. Now, those are the things that will be put together to produce that building. A bill of material is the list of materials that you must put together in quantity that you must also bring them together so that they can um, produce another material, or you can use that to render a service. Are you get what I'm saying? Hello, are you with me?
Yes, I'm with you.
All right. So let's say, for example, your business, you have a company that produces a car. To
Mm-hmm.
produce a car, the bill of material for a car is how many tires, right? Tires that is needed, glasses that is needed, number of lights and the shapes, the battery, the engine, the different specifications. Once the bill of material is set, you click produce, and then it will know how to produce it in the quantity that you have set on the bill of material.
Mm-hmm.
So the same thing happens to cooking soup. The bill of material is you want to cook a goosey soup or you want to cook okra soup. So for okra soup, what is the material that you need? Which are your recipe? So
Yeah.
another word for bill of material is recipe.
Okay.
So bill of material is basically what guides so that there won't be deviations, there won't be variants, there won't be variations in the items that have been produced. Are you getting what I'm saying?
Yeah.
So there won't be differences in the items that have been produced. You won't produce one and it is stronger than the other, or you won't produce one and then there's material that's needed that is not available. No. So those are the various things that causes usage variance. How do you now calculate variance? How do you calculate variance? You calculate variance by understanding the standard, and then also comparing it with the actual.
Mm-hmm.
That's in practice. That is how it is. Are you with me?
Definitely.
So in theory, there are other ways that we can calculate variance. One of them is to look at the contribution margin. Contribution margin is measured by sales minus variable costs. It shows you how much revenue is contributed, that is covering how much revenue is coming from your sales. Like when you sell and you are recording that you sold XYZ amount of items at XYZ amount of money, you can refer, you can show your computation by saying, oh, this is the selling price, this is the cost of the
Mm.
material that you have sold, and then you can get your margin. That margin is what can serve is another way of calculating variance. I've talked about standard minus actual. In some items that you are trying to calculate, you will to be actual minus standard. Do you understand?
Mm.
To arrive at variance. So,
Yeah.
but the whole concept of variance is to understand that something is not the way it is. Something is not right. So, those are the various ways that variances can be calculated. Now, back to in practice, there are many things that must be done for variance when we are doing variance analysis. You don't just say this is the variance. Okay, before I go into that, there are other ways you calculate variance in relation to budget. Let's say you have budgeted the next amount for a particular item or for a department, and the amount they spend is not the same as the amount you budgeted for it. You have variance.
Yeah.
So variance can be calculated by anybody, but what makes you stand out as a management accountant is how you can interpret the variance. Are you getting me?
Yeah.
How you can interpret the meaning that you can make out of the variance is what you should now focus on to be better as an hedge in management accounting. Not just the numbers, but the meaning of the numbers, what the numbers represent, the implication of any variant, any deviation from the real numbers, the obvious implication for anyone, and then miscalculation would obey. And then the calculation will fall in line because you've been able to put a meaning to the numbers that you have read out, that you have been able to arrive at. Do you understand what I'm saying? If
Yeah.
you just feed the management with the numbers and you don't tell them what the numbers mean, you have not done your job completely. So you must understand. And that is why management accountants must read wider, must understand what is the standard that is obtainable in certain things before you start giving meaning to any
Mhm.
variance that is noticeable there. You need to understand the industry practice, the best practices, industry related best practices. For example, you are an auditor, right? And you are sent to audit the usage of certain spare parts. You need to first understand the best condition the spare parts needs to be so that you can now compare and measure if they are given a fake item. So those are the variance. Those are the various variance that is calculated in practice. We talked about price variance. We talked about cost variance. We talked about even the budget part of it. We talked about material. We talked about usage variance. We talked
Yeah.
about production variance and the reasons why those variances exist. The reasons why those variances exist and how you can make meaning of them. Do you have any question?
No. Which one is procurement variant?
Procurement variance. You budgeted to procure some XYZ item at this amount, right? And maybe due to one reason or the other, you couldn't buy it at that amount. The amount you eventually bought it is different. Procurement. It can also be terminated as the amount you spent on buying items. That's in the cost. Any further question?
what I thought.
Hmm?
Yeah, you said something that things to be done when doing variance analysis.
Yeah, things to be done when doing variance analysis is first, like I said, you understand what is obtainable. You obtain your standard from the owners, from the process owners, from the process owners. Let's say you are an auditor and you have an engineer, and you are suspecting that the battery that the driver got is not the original one. It means that you know the original. So as an auditor, you first communicate with the people of that department, the process owners, what is the original one. They show you. Are you get what I'm saying?
Yeah.
They show you, let's say, for example, a laptop. You want to buy a laptop and you've calculated to buy it at an amount. But because the person you gave the money to, the vendor, did not buy it, he bought it at a lesser amount and never gave you balance. That's procurement variance. Now, you as an accountant now look at why is there variance? You now start looking, oh, you didn't get the one you want, you got you another one. Then you now went further to compensate you by saying, okay, it got you the other one and it got you something extra with it.
Mhm.
Do you understand? Maybe you wanted it to get a lap, you wanted a laptop that has fingerprint, but you didn't get you a laptop that has fingerprint. You got another laptop that doesn't have fingerprint. But to compensate you, went ahead and got you a laptop bag. Are you getting what I'm saying?
Yes, I am.
So that is procurement variance. So it's sometimes similar to cost variance, cost price variances and all, but this can be limited to procurement department also. So that is procurement variance. There are many forms of variances which we have touched and the meaning. Now, beyond all these ones that we talked about, like I said, the general rule of thumb is first you understand what is obtainable, and then you apply it to determine the extent of the variance. And then you also ask the process owners, why is there a variance? You are a management accountant of a company, and the company has promised to in the budget. There is in the last budget, you in the last budget you realize that the amount HR has budgeted for salary payment, every personnel cost is 100 naira. Are you getting me? And at the end of the year, you now see that they spent 18 naira. You're right, as the management accountant can challenge them. Why do we have 18 naira instead of 100 naira? Let them now explain to you that, oh, the number of people that they plan to recruit did not get up to that level. Are you get what I'm saying?
Yes.
Or people left their unit more than before.
Okay.
So you now start saying that, you now start asking them, you notice this and you notice this, why? And then they provide answers. The answer is what you now take back to the management and ask them, this is what you have done by the way of discovery and action. And that's all. Is that all for today? Can we call it a day? Do you have
Ah,
any further question?
like is that how for variance?
Yes, that's all for variance.
Eh.
Yes, ma.
Oh, okay. Okay. So basically, variance is just like be it price, cost, labor, anything. You just to
Yes.
understand the standard
Yeah.
and why, how, and why the difference occurred. Then you
Yes.
take it to the actual, right?
Yes.
Okay. So how is variance report like?
A variance report is just I will try and get a sample for you. If I don't have a sample, I can't lay my hands on
An example, right?
yes right now. But if I have later, I will send to you. But the one I have done before that is close to it, it's material consumption variance. I've analyzed material consumption before, and I brought in from production report, what the production guys post claim that they are produced, they
Mm,
have consumed and produced. I get me.
mm,
Then I compared it with what is in the books as to what they said they produced. So that variance in what they posted and what they actually used, you analyze it. So you print, for example, a line. Let me give you the HR as an example. HR spendings, right?
mm.
You now write a table actual, another column, sorry, a table standard that's budgeted, a table actual. You now say variance, then you now put notes, or you put comments, or you put remarks.
Okay.
So in front of every line item, you identify the standard, you identify the variance, and you put the variance on it. And then you put the notes. You can even go as far as putting the percentage of the variance.
Mm, okay. I would appreciate if you can like at least just an estimate, like just to see how the report looks like. But I know it's
Um,
just have
I
an
can't
idea.
lay my hands. Yeah, I can't lay my hands on anything right now. Nothing is even coming to my mind now as to anyone like that. But if I get, trust me, I'll relate with you.
Okay.
Yeah,
That's fine then. Thank you so much for your time. I really like it.
you're welcome.
Yes. Also, please help me send the recording after the voice.
Yes, it will, I'll send it to you.
Thank you so much.
You're welcome.
Thank you. Bye.
Yeah, take care of yourself.
All
And
right.